really cool organization.
Yeah, for sure. I appreciate Carolina reaching out so that you can kind of like have a partnership with us. But
Hello, everyone. Welcome to our second project spotlight here with Brian, the founder of Acadia Investments. I am Dani Marcus.
And I am Hayden Gensler. Brian, thank you so much for joining us today. How are you doing?
I'm good. Thank you guys for having me.
Yeah, it's a pleasure. So in about a minute, could you give us a little bit of a background about yourself? What are you studying, how you got to that field of study, and some of your work experience through your college experience?
Yeah, for sure. So right now I'm a junior at Bowdoin College studying mathematics with a minor in Chinese. I've always been interested in like investing and understanding like how businesses grow. And so when I entered college, Bowdoin is a liberal arts school, so we don't have like a finance major, like say at NYU Stern or Wharton. And so breaking into finance was definitely a uphill battle, but I think the mathematics and kind of STEM background is also an advantage that some people don't realize because as we move towards a more digital world, being able to be good at numbers and understanding those concepts really take you far a long way. And you can learn some of the accounting and finance in your own time as well, which is what I did. And so I started pretty early in terms of like recruiting and looking for internships as a freshman. And so my freshman summer, I did a year-long internship at a startup venture capital firm called Rebel One, where I was able to work kind of directly with the managing partner, learning all about like private market investing and what raising a venture fund looks like. And so that kind of experience was very like intimate, very hands-on, but I wanted to take it to a larger firm. And so for my sophomore summer, I interned at Wellington Management, which is a long only asset management firm. They do equities, fixed income, and also private markets. I focused more on the business management and also equity research side. And so that summer, like Wellington Management is a huge like $1 trillion asset management firm. And so definitely very different from like a startup venture capital firm. So I got that experience, which is great. And so recently, I accepted an offer to join PIMCO, which is also a very large asset management firm specializing mostly in bonds, as a summer analyst in their alternative investments division in New York City, focused on private distress debt and special situation investments.
Awesome, man. That's some good experience you got there, and that's a really exciting internship. Congrats about that.
Thank you.
And so, in the words of the founder, I'd like you to tell everyone what is Acadia Investments.
Sure. So Acadia Investments, the mission is kind of threefold. We are a intercollegiate student-run impact fund, and so this was started back in 2020 when I was a sophomore, and it was kind of a combination of different reasons. One of them is creating an opportunity for liberal arts students, like students at my school, to gain hands-on experience, like learn about capital markets. Secondly, is I wanted to help students from underrepresented backgrounds like myself, who come from like a low income first generation background, who traditionally didn't have access to these resources or mentors to help them break into finance. And so offer ourselves as a resource to those kind of students, and also kind of focusing on ESG investing and teaching students early on how we can, as investors, as retail investors, and also people who are going to work in the industry, why ESG investing is important and like what that looks like in terms of actually researching companies and investing in them.
Nice. So where did you guys get this idea for Acadia, and how did it become a reality for you guys?
Yeah, so I think Sophia, my co-founder, she is also a junior at NYU Stern, and she is, I think, doing a concentration in sustainable investing. And so she was already very passionate about that field and utilizing like finance to kind of make a positive change. And I also noticed like ESG and impact investing becoming a very big theme, like in the asset management world in general. And so I wanted to better understand it and kind of dive deeper into like what is ESG investing and how do we define that? And it's very interesting because when you speak with actual ESG professionals, they are aware that this is a very new field. And so basically everything we're doing is like at the frontier of whatever this is. And so I knew that people like you and I like are caring much more about what we invest in. And so,
Mm-hmm.
you know, for example, you don't want your endowment to be investing in what we call like sin stocks, like
Yeah.
oil, you know, oil and gas, or like
Mm-hmm.
cigarettes, or you know, like stuff like that. And so I thought that was a really big area that was worth exploring. So we decided to start it.
Awesome. And from the moment you started in like 2020, from the moment that you guys got here now, like what was the hardest like challenge that you guys went through, and how you guys were able to grow the team so much?
I think one of the biggest challenges was the logistics, like actually starting a investment fund at a school. It was
Mm-hmm.
kind of an uphill battle because the Bowdoin Endowment, which you know has posted some of the most impressive returns, I thought we would have, you know, it will be reasonable for me to kind of start an investment fund that's like a sleeve of the endowment, so that you
Mm-hmm.
know
Gotcha.
under the mentorship of the chief investment officer. I'm sure your school has something similar, and so I thought that it would be a natural extension and you know kind of offer it
Mm-hmm.
for our students who are interested in finance. But it turns out that like they don't really want that liability, which makes sense because why would
Gotcha.
they,
Mm-hmm.
you know, why would they trust you who's, you know, you're like 19, 20 years old with
Mm-hmm.
money.
Yeah.
It's like, and so, and they, you know, that was the logistical part. And so I decided to just go out and fundraise on my own. But then, like, in terms of fundraising, I don't mean like outside investors. I just mean like friends and
Gotcha. Mm-hmm.
family. And so
Mm-hmm.
I had some friends and family who pitched in some money. But then we also had a very generous Bowdoin alumni who also wanted to help support our mission. And so
Awesome.
he was able to chip in some money as well, which we have to return, you know, after the
Mm-hmm.
project ends. But I think so far we've done a pretty good job, and I would say that was one of the biggest challenges. In terms of like finding people to join, that wasn't really difficult because a lot of
Mm-hmm.
people are already interested in ESG investing and also meeting students from other schools as well. So we just
Yeah.
posted on LinkedIn and also through word of mouth. And we were able to start our first semester, I believe, back in 2020 with, I think, like 12 analysts. And we
Oh,
split up,
awesome.
yeah, we split up between senior analysts and junior analysts, which is usually determined by your class year. So, you know, freshman, sophomore, you're a junior analyst, junior, senior, you're a senior analyst. And so we were
Mm-hmm.
able to start like a pretty small cohort. And last semester we grew to like, I think 18 or 19 analysts. And so,
Wow.
yeah, we're definitely trying to keep the quality of the program high while still
Mm-hmm.
maintaining like, while still focusing on the impact, which is helping students break into finance.
Mhm.
Of course.
That's awesome. Geez, you guys have really grown and sounds like a successful starting point for you guys. What has been the biggest lesson for you guys running Acadia Investments?
I would say, um, I would say that it's not easy to plan a program. I would say the biggest thing I learned was like how do you keep people engaged? Like how do you lead basically? And how do
Mm-hmm.
you build the infrastructure so that communication is clear and that expectations are set clearly so people know what work they have to do, they know what to expect. And I think it seems like, oh, it should be easy. Anyone should be able to do it. But it's harder than you think. You know, it's like you want to keep people engaged and
Mm-hmm.
not like bored out of their minds and still
Mm-hmm.
feel like
Mm-hmm.
you're getting something out of it. So I think that was pretty difficult because I'm not a teacher, you know, like I don't know how
Yeah.
to lead classes. And so I definitely had to learn a little bit. And I think I was aware of that. So we always collect feedback. Like we do exit interviews by the end of each semester so that we speak
Awesome.
one-on-one with people to understand what we did well, what we can improve on, and stuff like that.
Gotcha. That is super cool. How it's like a growing experience to everyone, the ones leading it, the ones that are being the analysts. So I did some research in Acadia and I saw that you guys had some really good returns last year And I wanted to ask a little bit to share with the audience, like, what is usually your guys' approach with the capital markets and some of like the good experiences you guys have had in the fund so far?
Yeah, so I would say 2020 and 2021 was definitely like a bull year for everyone. You know, like
Yeah.
I would make a joke like if you invested like April or May of 2020, you could throw a dart on a list of
Mm-hmm.
stocks and you would make a
Yeah.
return. And so
Surfed away. Yeah.
yeah. So I wouldn't I wouldn't take too much credit. I think we just started the fund at a good time. But I would say like in terms of our investment process, we focus mainly on we have equities, we have an equities team and also a fixed income team.
Mm-hmm.
Equities,
Okay.
we do both long and short, but mostly long. So we usually invest in companies and hopefully they hope that their stock price appreciates. And then of
Mm-hmm.
course the short side is the opposite side. But um, I think our investment process is pretty long. We usually do a what we call a investable universe scan in the beginning. Like
Mm-hmm.
we have certain criterias that we're looking for, and then we scan like every single stock like out there, and then we like dive deep into each
Gotcha.
name. We rate it as like as a team, and then we come up with I would say like 6 to 7 stocks that we want to
Mm-hmm.
dive deeper into for the remainder of the semester. And so each semester so far, we've made probably about like 2 to 3 new investments per semester.
Gotcha.
And so
Mm-hmm.
not that many, but it takes us about like the whole semester, which is like 3 to 4 months to do the whole due diligence process. And so, yeah, I mean, I can talk more about what we look for, but um, in terms of like the biggest success, I would say and this has still been our biggest win since the beginning, is Celsius
Mm-hmm.
Holdings.
I
So I
read
was
that.
looking
Yeah.
at them. Yeah. So I'm sure you guys might see them at the supermarket, like maybe
Mm-hmm.
you've even had one, but I remember seeing them at $4 before I started Acadia, and I was like, this company is interesting.
Mm-hmm.
They have a product, they have a very solid team, um, but they're only at $4, and so um, oh, but the most important part I'm forgetting is Celsius. Their catch is like you can burn fat and lose weight just by drinking their energy drink, which was like, is that even possible? And
Mm-hmm. Yeah.
they actually have a patent on that technology. And so
Oh,
I don't
wow.
know if you guys know, but that's a very strong competitive advantage if you have a
Mm-hmm.
patent on that kind of technology. And
Mhm.
so it was really just for them to start scaling and like in terms of distribution which they really did well on. And so they went from like 4 to I think like I don't know where they're at now because we exited a little bit earlier than we should have, but I think we exited around 30.
Okay.
And so $30 a
Oh,
share.
wow.
Yeah. So
Mm-hmm.
that was like a couple 100% return. And so that was definitely one of our best picks.
I read that in you guys's
Awesome.
in some of the press I was reading over about you guys, and I thought it was
Yeah.
cool because like before COVID, like I never saw Celsius, and now it's just like what everyone's drinking, and it's like it just takes up the whole. I don't know. We go to Quick Trip here, but wherever you go, it's just like it's the it thing now. So that's very cool. I did not know that a patent,
Mm-hmm.
but that's very interesting. I'm gonna have to read about that.
Yeah, for sure.
So Brian, could you give us some words of advice for students looking to start a project with fellow students or running a project themselves right now?
Yeah, I would say start with your endowment because if it's possible, that would be the best case scenario. But it's not uncommon for students like ourselves who want to start an investment fund. So they have seen like kids come and go who like start like half-ass funds and then leave, start like half-ass
Mm-hmm.
clubs and then leave. And so they're very much aware of that. And like you're not going to be able to convince them otherwise. And so I actually had a conversation with some students from Princeton a couple months ago who were asking for exactly that advice. And the advice I gave them was to just start an LLC, like which is what we have
Mm-hmm.
done, start an outside club, and then friends and family money or whatever money you can get your hands on as a group, and then just start investing. Because starting an LLC is pretty simple. You can do it online now, either
Mm-hmm.
for free, or you pay like 50 to $100, and one of these software things will do it for you. And then the rest is just like starting a website and then figuring out what your strategy is. And so if you're really passionate about it, I would recommend going that route because it's the most simple. But you do have to be careful, because if you start an LLC, my school was very careful about not having any of the logos on the website. One of the directors actually emailed me like, "Oh, there's a logo, you got to take that out." And you can't use any of the school's resources to like basically advertise your investment fund or try to recruit people, because like that would be pretty bad if you got, in the crossfires of your school. So but yeah, I would say just go out and do your own thing, and or you can just do an investment club at your school and not manage any funds. But I think in terms of like your experience and what potential employers see, it's the same. Like, you're taking a leadership position, and it shows that you're very passionate about investing. So either works.
Gotcha. Yeah, that is like on the legal side of it. We've last year saw about starting a project like similar to that, but more on the VC side. And there's like a lot of things that like you have to be really careful about and get informed. So that's really helpful. So to wrap up briefly, would you like to share three of your favorite reads and two of your favorite podcasts?
Oh yeah, there's actually I have a whole bunch. I'll say that one of my favorite ones is Pioneering Portfolio Management by David Swenson, the previous chief investment officer of the Yale Endowment. And then I think I also really like
Here we go.
What Works on Wall Street. That one was a very good book. And then I think recently I finished reading Distressed Debt Investing or Distressed Debt Analysis by Richard Moyer.
Awesome.
Yeah, because I'll be doing that this summer, and so I wanted to read up on it. But I found that to be a very interesting book. But I can definitely share like a longer list with you guys. Maybe you can share with the audience afterwards.
Oh, totally. Yeah, I appreciate it. Well, Brian, it was great having you with us today. We are super excited to see the future of Acadia. And if you want to share your socials or website, feel free to do this at the end. We really appreciate you and are super thankful to have you here today.
Yeah, likewise. Thank you so much for having me, Dani and Hayden, and keep up the great work.
Thank you, Brian.